It's time now for business news with Kate Moody, who joins me now here in the studio. Kate, the EU has come one step closer to handing out financial aid from its emergency COVID-19 recovery plan.
Yeah, this has been a long time coming. The head of the European Commission has now given the green light for Portugal to receive around 16 billion euros in funding and Spain some 140 billion. They are the first countries to get that approval. Ursula von der Leyen will then be heading to Greece and Denmark on Thursday. On her trip, incidentally, she has started using the bloc's digital health certificate to facilitate travel. You can see her showing off that QR code there earlier. Well, each EU member state has had to submit for approval the details of how they plan to use that money, with a percentage earmarked for digital and environmentally friendly projects. Once approved, the funds will start arriving sometime in July. Von der Leyen said it was a major step for the bloc as a whole.
Our plan is worth 800 billion euros in prices of today. It is the largest recovery package in Europe's history since the Marshall Plan.
Well, on Tuesday, the EU said it had raised its first 20 billion euros by issuing 10-year bonds. But just how is this financing going to work? Mario Sofos has been taking a look at the Next Generation EU Fund.
The beginning of a landmark borrowing spree that's set to transform the EU into a huge cash machine for member states hit hard by COVID-19. Brussels seeks to raise a monumental 800 billion euros in just 5 years, with 750 billion euros earmarked for the European Recovery Fund. The fund will be financed by a common EU debt, unlike before the pandemic when countries managed borrowing and debt on their own terms. The sums dished out by the EU will vary from country to country, depending on how heavily COVID-19 impacted on them. Italy will receive the highest amount at 192 billion euros. 40 billion will go to France, 69.5 billion to Spain, and 23 billion to Germany.
It's going to take into account the impact of the crisis in relation to national wealth and population, and that's why big countries that were seriously affected, like Italy and Spain, and to some extent France, will receive more than countries that are smaller or that were less affected by the pandemic.
Half of the recovery fund will be handed out in the form of loans, with each country individually paying back what it receives. The other half of the fund, though, some 360 billion euros, will be distributed as grants. Questions still linger about how the common debt financing the fund will be paid off.
One path involves each country repaying according to the size of its economy, and there are other possible routes by which the money will be repaid in the form of a Europe-wide tax. For example, a tax on the profits of companies that produce in the European Union, or a tax on importing goods that contain CO2.
The funding should help EU member states build back their economies, with the bloc on track to grow by 4.2% this year.
The US Federal Reserve may start scaling back easy lending conditions sooner than it initially predicted, as the pandemic begins to have a, quote, diminishing effect on the US economy. America's central bank said it was looking at 2 interest rate hikes by late 2023. Its previous target was 2024. For now, though, its lending conditions and support for the US economy remain on hold. High levels of inflation have sparked concern among some economists. Consumer prices jumped 5% in May and producer prices 6.6%, both the fastest paces in over a decade. When inflation outpaces wage growth, it can make life too expensive for many workers, and it can prompt central banks to tighten monetary policy. The Fed raised its forecast for inflation from 2.4 to 3.4% by the end of this year, but insisted it believes the current levels are transitory and will settle closer to its 2% target in the long term. Let's check in on the day's trading action now. Investors were a bit surprised by that decision to bring forward the timeline of interest rate rises. Wall Street accelerating its earlier losses. The Dow Jones was down as much as 300 points earlier. The S&P 500 and NASDAQ each closing lower after those previous record highs reached earlier this week. The major European indices closed mostly higher earlier on, gains in London, Paris, and Milan, just Frankfurt in the red there. French President Emmanuel Macron has said the possibility of breaking up dominant digital giants is a legitimate question that should be asked. The tech industry could be facing more pressure around the world. This week, Joe Biden named a vocal Silicon Valley critic, Lina Khan, to head the Federal Trade Commission, that's America's top tech regulator. The EU is also trying to overhaul its digital policies with new proposals to police content and reduce market monopoly. Apple chief executive Tim Cook said today that those proposed changes were not in the best interest of users, but that Apple would continue engaging in conversation with Brussels. Both Cook and Macron were addressing France's biggest tech show, Viva Tech, which kicked off in Paris earlier today, Tom, one of the first major events for the industry to take place mostly in person since the start of the pandemic.
Okay, Kate Moody with the business news. Thank you very much.